A financial planner or personal financial planner is a professional who prepares financial plans for people. These financial plans often cover cash flow management, retirement planning, investment planning, financial risk management, insurance planning, tax planning, estate planning, and business succession planning. Scope: financial planning should cover all areas of the client's financial needs and should result in the achievement of each of the client's goals as required. The scope of planning would usually include the following: risk management and insurance planning, managing cash flow risks through sound risk management and insurance techniques, investment and planning, issues planning, creating and managing capital accumulation to generate future capital and cash flows for reinvestment and spending, including managing for risk-adjusted returns and to deal with inflation, retirement planning, planning to ensure financial independence at retirement, including 401 kiloseconds, IRAs, etc. Tax planning, planning for the reduction of tax liabilities and the freeing up of cash flows for other purposes. Estate planning, planning for the creation, accumulation, conservation and distribution of assets, cash flow and liability management, maintaining and enhancing personal cash flows through debt and lifestyle management process. The personal financial planning process is described in ISO 22222-2005 as consisting of 6 steps. Step 1. Establishing and defining the client and personal financial planner relationship. Step 2. Gathering client data and determining goals and expectations. Step 3. Analyzing and evaluating the client's financial status. Step 4. Developing and presenting the financial plan. Step 5. Implementing the financial planning recommendations. Step 6. Monitoring the financial plan and the financial planning relationship. Licensing, regulations and self-regulation. In many countries, there are no requirements regarding use of the title of financial planner. Australia: in Australia, a company providing financial services must obtain a license from ASIC. However, there are no requirements for the individuals providing the financial advice, and the ASIC website states, holding an AFS license does not provide a guarantee of the probity or quality of the licensee's services. India: Financial Planning Standards Board. India. Malaysia: the Securities Commission Malaysia introduced legislation through amendments made to the Securities Industry Act in 2003 to regulate financial planning and the use of the title or related title of financial planner, or to conduct activities related to financial planning. In 2005, amendments to the Malaysian Insurance Act require those who carry out financial advisory business and/or use the title of financial advisor under their firm to obtain a license from Bank Negara Malaysia. Some persons who offer financial advisory services, e.g., licensed life insurance agents, are exempted from licensing as a practicing requirement. Singapore: in Singapore, financial services sector are highly regulated by the Monetary Authority of Singapore. MAS is the regulator and supervisor of financial institutions in Singapore. Rules are set by MAS for financial institutions and are implemented through legislation, regulations, directions and notices. http://www.mas.gov.sg. Currently, majority of the financial planners are commission-based, which at times may cause conflict of interest on the product's recommendation. In 2015, balanced scorecard framework is implemented to better align the interests of the FA industry and consumers. This ensures FA representatives and supervisors meet key performance indicators that are not related to sales, such as providing suitable product recommendations and making proper disclosure of material information to customers. Failure to achieve good grades for these non-sales KPI will directly affect their commission. New Zealand: the Financial Markets Authority provides authorization to individuals who provide personalized financial advice, investment planning services and/or discretionary investment management services. Individuals who receive authorization are referred to as an authorized financial advisor. In order to receive authorization, individuals must complete the National Certificate in Financial Services.